Hey guys, it's Sasha. Around 5 months ago, I started a little challenge. I called it Man versus the Market. The challenge was simple. It was to set up a new investing portfolio, share it publicly, and see if I can beat the stock market. Now that does sound simple enough, but the absolute vast majority of investors out there, including established funds, do not beat the stock market in the long term. So I thought this would be a bit of fun. Now it is time to do a little update. I haven't done one for a while on how it is going, and share some tips as well while I'm doing it on what it is that I'm doing with this portfolio and why it is that I am doing it. I will share every single trade in this portfolio and I'm going to explain why I made it. And by the way, I am doing way better than the stock market so far. I definitely didn't expect to get this sort of crazy growth this quickly, so let's dive right in. Now, the platform that I have chosen for this challenge is called Stake. Stake is an investing app available in the UK, Australia, and New Zealand, and is one of the best options out there for investing in US stocks, which is what I am doing in this competition, in this thing that I've set up. Stake was absolutely perfect for this challenge because it is completely free to make trades in US stocks for somebody like me who lives in the UK, and that was phenomenal when I was setting it up. Popular platforms like Trading212 or Freetrade will charge you a foreign exchange fee for each single transaction. Even though those are relatively cheap fees, you still have to pay them, but I don't have to pay them on Stake. You do have to pay a 0.5% foreign exchange fee when you put money into Stake, and then you also have to pay that same foreign exchange fee when you withdraw the money back out. But while it's in, after you've paid that one fee, you don't have to pay anything. That's it. Pretty awesome for anyone who wants to invest in US stocks long term and maybe move money between different stocks over time. By the way, you can get a free share worth up to $150 with Stake if you use my link in the description, create an account, and make a minimum £50 deposit into that account. So if you want to get a free share for trying the platform out, feel free to go and use that link in the description. Now let's look at this portfolio. First, I'm going to show you everything in the account, and then I'll show you the Excel where I track how it's been doing. And that's because Stake, like every other online investing platform, doesn't give you an accurate way of tracking your actual investing growth over time. It says over here that I am $1,577 up on my investments, which is great, but it is only on the investments that I currently have in my portfolio right now. So it doesn't count the investments that I used to have that I have since sold, and if I reinvested the money relatively recently, it will then artificially reduce the growth, if you like, because I'll only count it from that point. I'm going to show you all of that in just a second. Bear with me. I'm a little bit higher in terms of the growth than that 1577 figure. So at the moment, I have 5 stocks in this portfolio, and if you've been following my channel, you probably won't be surprised at which stocks they are, because these 5 stocks happen to make up more than 90% of my total investing portfolio outside Stake as well at the moment. I even made a whole video where I talked about these exact 5 stocks some time ago. These 5 stocks are AMD, Fiverr, Lucid Motors, Palantir, and Tesla. Tesla, AMD, and Lucid are up by a ridiculous amount in this portfolio. Palantir is up 14% so far, and the Fiverr move hasn't played out yet. And that is because I have invested very heavily into Fiverr very recently after its price collapsed. The growth there might take a few more quarters, but I am expecting some serious numbers. Okay, let's look a little bit deeper. A few things have happened since I last made an update. First off, I consolidated my positions down in August. I had far more stocks in this portfolio, but I was going through the financials of all of the companies that I was holding, and I sold out of a bunch of them where I held smaller positions. Specifically, I sold Adobe, Etsy, Twilio, Micron, Apple, Square, and Twitter, all gone from this portfolio. Now, I sold most of these because I just didn't think that the outlook for them over the next 6 to 9 months looked as good as for some of the other options that I did want to have my money in. I actually still think that some of these companies will do well. Some of them are going to do really well in the long term. But here is me trying to beat the market in my own way by being a little bit more active, a little bit more strategic, and a bit more aggressive with the strategy. Apple was a tougher call than the rest, but on balance at the time, I felt I could park the cash into a better spot when I was making that transaction. As you can see here, I made all of these sells in August and September, and I put a whole load of money into Fiverr and smaller bits into Lucid and Palantir. So far, Fiverr has not paid off. You can see Fiverr was $175 when I was buying, and it is $176 as I'm recording this video. So no movement at all. Lucid and Palantir are both doing pretty well, and I'm particularly excited as to where Palantir is headed. So we'll watch that one. So I sold 7 stocks. And that seems to have played well on balance, despite the fact that Fiverr, which is where most of the money hasn't moved, because Twitter, Square, Micron, and Twilio are all down, and down by quite some bit. So I'm quite happy with having made those moves. Apple share price is pretty much the same as when I sold. It hasn't moved up or down. It has in between, but at the moment it's the same. And Etsy and Adobe are up, so I lost out on selling them, but on balance, I am pretty happy with having made those calls. Then you can see up here, I also got 4 free shares in the last week. I got 3 GoPro shares and 1 Dropbox share. And so I sold those free shares and I bought Palantir and more Fiverr. By the way, those free shares are from people who some time ago clicked on one of my links and then they went and funded their account. So thank you very much if you went and did it, because I got a free share as well. And you can still go and get a free share if you use the link in the description below. Anyway, you can see that the bulk of my portfolio is in Tesla, and that is partly down to an intentional overweighting that I have placed on Tesla stock. I expected Tesla stock to make a big move, and I even made 3 separate videos saying exactly this and explaining why in the last couple of months. And then guess what? Tesla stock did move. It went nuts. And Tesla very quickly joined the $1 trillion company club. And so naturally, because I already placed a relatively large amount of money into Tesla, and then Tesla grew so much as well, Tesla's share of that total portfolio has also increased as a result. The other good news is that my 2 other biggest positions have also done very well. And that probably is a little bit to do with why I was placing a bit more money in them. I sort of thought that they were going to be moving a bit more quickly. So that's why I weighted them. AMD is up 54% here, and Lucid is up 42%. So the portfolio total at the moment is $4,792.61. Pretty happy with that. Here's a spreadsheet that I use to track performance, and that should explain it in a bit more detail. Here on the left, you can see the deposits. I've added the free shares here as deposits at the bottom so that we can properly compare returns so that it's all fair. The total amount invested, including those, is $3,133.34. And you can see that I've stuck that 4,792 up here as the current value of the portfolio. And then I have this little rough calculator. It just does some basic maths, and it says that I have made a 52.96% return so far on this portfolio. It's just the ratio of that 4,792 over the 3,133. And then, this is not too bad. I am laughing. This is ridiculous. And then I have the 2 big deposits over here. You can see in May and June, they only happened 5.6 and 4.4 months ago. Under half a year on those deposits. So when I then go and work out the annualized version of the return, the number becomes crazy, because what I do is I use a money weighted average time that money's been invested. So I go and look at how much I've invested, then I look at how long that's been invested for, and I work out what the average time my money's been in the market by doing that, and then I just use that to sort of convert that 52% return to what the annual equivalent is so far. And that gets me 185%. Hilarious. It's ridiculous. It's stupid. This is 100% not going to be 185% return in 6 months time, or whenever it is when we hit the 1 year mark, but it's pretty funny, although it has been growing recently. But anyway, then on the right, what I do is I compare this to VTI. VTI is the Vanguard Total Stock Market Index. That is the index that I chose to try to beat, and all of the companies that I have are in that index. Most of them are bigger, the same for VTI. I have Lucid, which is one of the smaller ones, which is not one of the really big ones. So it's kind of like very similar distributions, and it makes sense to compare it. And as I'm recording this video, VTI is at $234.10. And the important numbers are these ones you can see on the right over here. This just takes the exact same kind of calculation that I did for my own investments and tries to replicate them for VTI. It kind of presumes, it takes each of the deposits that I have made in that table on the left, and it calculates what the return would be if I made those investments on that day into VTI instead of whatever I was putting it in. And that's why I have the VTI price next to each of those deposit numbers, which is the price it was on that day. And the VTI return, if I did this, would be 6.43%. And the annualized version of that is 16.6%. By the way, 16.6% per year from the stock market is one heck of a return. That is a really, really good level of return because it is far higher than the 9 to 10% that you would expect on average. So VTI so far is actually doing pretty well. But at the same time, so far, I have had a ridiculous awesome start. And the first half a year of this challenge, we are smashing the VTI, so pretty happy with that. It is going to be fun when this portfolio gets completely destroyed, when it gets smashed in the next tech sell-off or in a market crash, and we see the numbers coming down, and it'll be interesting to see how does it fare compared to the index, because that is when the power of the index is really going to shine. But we'll have to wait and see how that exactly plays out and when exactly it plays out. Stay tuned for more updates on this Man versus the Market series. If you like this video, don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching. I really, really appreciate it. And as always, I'll see you guys later.